Functions of commercial bank. Here we can see a chart which shows the functions of commercial banks. On the left hand side we have primary functions, and on the right hand side we have secondary functions. Under primary functions we have accepting deposits and granting loans and advances. Under secondary functions we have agency functions and utility functions. Let us see the primary functions first. Primary functions are known as core banking functions. They include accepting deposits. Accepting deposits is one of the primary functions performed by commercial banks. The deposits can be classified into two types, that is, time deposits and demand deposits. Time deposits. These deposits are made by the customers for a certain period of time during which the money cannot be withdrawn. Since the money is deposited for a fixed period, the bank invests the money or gives it as a loan to another customer on which the bank earns interest. As a result, the bank can pay high interest to the deposit holder on the outstanding amount. Time deposits are of two types: fixed deposit and recurring deposit. The first one, fixed deposit. It is a type of account in which fixed amount is deposited for a fixed or specified period of time. It is a time-bound deposit which earns fixed interest rate. Rate of interest on fixed deposit is relatively higher as compared to saving bank account. The rate of interest also depends on the duration for which money is deposited. Higher the duration, higher is the interest rate. A fixed deposit receipt is issued by the bank for amount deposited in this account. Loan can be taken from the bank against this receipt. Money can be withdrawn only at the end of the stipulated period. If the amount is withdrawn before the date of maturity, the bank pays a low rate of interest or it may charge a penalty. The second one, recurring deposit. A recurring deposit is a type of account in which fixed amount is deposited in the bank at regular intervals for a period of time. It is operated by salaried persons and businessmen having regular income. Separate passbook is provided to know the position of recurring deposit account. Rate of interest on such deposits is higher than savings account. The depositor can withdraw accumulated amount along with interest only after the stipulated period. If the amount is withdrawn before maturity, the bank pays a lower rate of interest or may charge a penalty. Example: Mr. Aditya may deposit rupees 5,000 per month in this account for 2 years. At the end of the 2 years, he will get rupees 1,20,000 plus accrued interest on this amount for the duration of 24 months. The second one, demand deposits. These are deposits which can be withdrawn on demand. The customers can withdraw money at any time as per their wish through withdrawal slips, checks, ATM cards, online transfer, etc. Demand deposits are of two types: saving account and current account. Saving account. A savings account is a type of bank account where people deposit their personal savings. Savings accounts have encouraged the habit of saving among people. It is generally operated by people who earn regular or fixed income. Example, salaried people or daily wage earners. There are certain restrictions on the number of times money can be withdrawn from the account. These accounts carry low interest rates. Interest is credited monthly, quarterly, half yearly, and yearly basis. Some banks provide facility of flexi deposit for saving account holders. This facility combines the advantages of saving account and fixed deposit account. This is not separate deposit account. Multiple option deposit account. Here, excess amount after specified limit is automatically transferred to fixed deposit. When adequate funds are not available to honor payments, funds are transferred back from fixed deposit to saving account. Facilities such as passbook balance on SMS, account, statement, etc. are provided to account holders. The second one, current account. It is usually operated by business firms and other commercial organizations who carry out frequent transactions involving huge amount. The banks provide statement of account every month. It is generally operated by businessmen, companies, corporations, public bodies, trusts, or any other commercial organization. There is no restriction on deposits or number of withdrawals. The current account holder can deposit and withdraw money as many number of times as required. Generally, no interest is paid by the bank on this account. Overdraft facility is available for this account. Now we come to granting loans and advances. The commercial banks provide loans and advances to business firms and others who need funds. The amount collected by banks in the form of deposits is given as loans and advances to customers. The bank charges them a higher rate of interest than the interest paid on deposits. Granting loans and advances is one of the primary functions of commercial banks. Loans and advances can be explained as follows. The first one, loans. Loans are on the basis of duration. Loans are provided to businessmen and others who need bank funds. The borrowers can use entire sanctioned amount or can even withdraw in installments. The bank charges interest on the sanctioned amount. Types of loans on the basis of duration are A. Short-term loans. These loans are granted for a period up to 1 year so as to meet borrowers' working capital requirements. B. Medium-term loans. These loans are granted for a period of 1 to 5 years so as to meet borrowers' working and fixed capital requirements. C. Long-term loans. These loans are granted for a period of 5 years or more so as to meet borrowers' long-term capital requirements. The second one, advances. These are small-term funds provided to businessmen so as to satisfy their different financial requirements. Advances are as follows. A. Cash credit. Under this facility, a separate cash credit account is opened and the customer can withdraw funds from this account up to a certain pre-decided limit. The cash credit facility is provided to current and savings account holders. Interest rate is higher on CC. It provides working capital for longer time period. Separate cash credit account has to be maintained by the borrower. The next is overdraft. Under this facility, the customer is allowed to withdraw more than what is currently outstanding in the account up to a certain pre-decided limit. This facility is offered to current account holders. The period can vary from 15 to 60 days. Interest is charged on actual amount withdrawn. It enables current account holders to meet their working capital requirements. No separate account is maintained and entries are shown in current account. It is a temporary arrangement for a short period. C. Discounting of bills of exchange. Banks grant advance by discounting bill of exchange. It charges nominal fee for providing this service. The drawer of bills of exchange or beneficiary can discount the bill with bank to obtain an advance. At the time of maturity, the bank will recover the amount from the drawee. Now we come to the secondary functions. The secondary functions are classified into agency functions and utility functions. Let us see first the agency functions. Agency functions are the secondary functions performed by commercial banks. A commercial bank acts as an agent or representative of its client. Agency functions as follows. The first one, periodic collections and payments. On behalf of the customer, commercial banks collect salary, dividends, interest, and any other income which are to be received by customers. Similarly, banks also make periodic payments such as taxes, bills, premiums, rent, etc. on the standing instructions given by the customer. The banks charge certain fixed amount in the form of service charges for providing these services. The second one, portfolio management. Banks also undertake portfolio management service wherein they buy and sell securities such as shares, bonds and debentures on behalf of clients. The banks send detailed account statement on a regular basis and also provide the client with various analysis and recommendation reports. Many clients are opting for such services of commercial banks. Next, the third point, fund transfer. Commercial banks undertake various initiatives to make fund transfer free. They provide the facility of transferring funds from one branch to another branch as well as another bank. The fourth point, dematerialization. Banks provide dematerialization facilities to their clients wherein they undertake the electronic transfer of shares in case of purchase or sale. These facilities enable clients to hold their securities in an electronic format. The last point, foreign exchange, forex transactions. Forex is an abbreviation of foreign exchange. A bank may purchase or sell foreign exchange on behalf of its clients. A bank purchases forex from its clients, which the clients receive from foreign transactions, and sell the forex when the clients need it for overseas transactions. Let us see an example over here. When a person wishes to go on a foreign tour, he will contact his bank and ask for currency of that country against Indian rupees. When he is back from his foreign trip and foreign currency is remaining unspent, he will give it back to the bank and get Indian rupees in return. Now let us see the utility functions. Utility functions are the secondary functions performed by commercial banks. Here a bank provides certain facilities or products for the benefits of their clients. These facilities or products can be explained as follows. The first point, issue of drafts and checks. A draft or check is an order to pay money from one branch to another branch or another bank. The drafts are issued by banks to account holders and non-account holders, while checks are issued only to the account holders. A commission is charged by banks for issuing draft. The second one, locker facility. Banks provide locker facilities to customers for depositing their valuables like jewelry, documents, etc. in safe custody of banks. The customer can access these things anytime during the banking hours. The third point, project reports. On behalf of clients, banks sometimes prepare project reports and studies. These reports enable firms to get funds from the market as well as to obtain clearance from government authorities. The third and the next one, gift checks. Any person, account holders as well as non-account holders, can obtain a gift check by giving equivalent amount to the bank. These checks or gold coins can be issued as a gift on occasions such as wedding, party, birthday, etc. A project report is a document which provides details on the overall picture of the business. This project report can be presented to prospective investors so that they can invest their funds in the business to help the business expand rapidly. The fifth point, underwriting services. The banks underwrite the issue of securities issued by companies. If the shares are not fully subscribed, the underwriting bank agrees to take up the unsubscribed portion of the securities. The last point, gold-related services. Many banks provide gold services wherein they engage in commercial buying and selling of gold ornaments from customers on a large scale. Some banks also provide advisory services relating to gold funds, etc. We have now seen the functions of commercial banks, in which we saw the primary functions, in that accepting deposits and granting loans and advances. In secondary functions we saw agency functions and utility functions. Hope you all have understood the primary functions as well as the secondary functions.